This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today, searches remain elevated as Friday closes out February with modest pullbacks. The S&P 500 sits near 7,040, down about 0.3 from Thursday, but still holding comfortably above the 7,000 milestone broken Wednesday. The Nasdaq is off 0.5, and the Dow slips 0.2. But the real story is what didn't happen. The market held gains from Nvidia's explosive earnings that sent stocks to record highs. This is healthy consolidation, not reversal. Friday's modest selling is classic profit-taking after a massive rally. Nvidia surged 9 Wednesday after reporting 78% revenue growth and insatiable Blackwell demand. That sparked a broad tech rally with the S&P 500 breaking 7,000 for the first time ever. Now investors are locking in gains before the weekend and month-end. Fund managers are rebalancing portfolios, selling winners to realign weightings. Some traders are cautious about holding big positions into March given geopolitical uncertainty and upcoming economic data. But the key fact is this: the market is staying above 7,000. That confirms Wednesday's breakout wasn't a false move. February delivered exactly what bulls hoped for: validation of AI infrastructure spending. Nvidia-proved demand is real and growing, not hype. The 78% revenue growth and multi-year order visibility demolished skeptics who claimed tech was overvalued. Software stocks that fell 30% during the AI spending panic are now recovering 15 to 20%. The market's concentration bet on AI leadership paid off spectacularly. Friday's pullback doesn't change that thesis. It's simply traders taking profits after a 200-point S&P 500 surge from last week's lows. Month-end rebalancing adds technical selling pressure that has nothing to do with fundamentals. If you stayed invested through February's volatility, your portfolio is ending the month with solid gains. Tech-heavy accounts benefited most from Nvidia's rally and the broader semiconductor surge. Even with Friday's modest decline, the S&P 500 is up nearly 3% for the week and positive for February overall. Your 401k just hit all-time highs above 7,000. For March, the setup looks constructive. Corporate earnings validated AI spending. The economy is cooling enough to potentially bring rate cuts, and inflation is moderating. Risks remain: tariff uncertainty, geopolitical tensions, and the possibility of profit-taking if the rally extended too fast. Monday starts March with fresh economic data. Watch the ISM Manufacturing Index. It'll show whether the real economy is keeping pace with tech strength. Jobs report comes Friday, which determines if the labor market is cooling enough for Fed rate cuts without breaking. Also watch for any tariff announcements over the weekend. Trump's trade policy remains unpredictable. The key technical level is 7,000 on the S&P 500. As long as the market holds above that, the bull case stays intact. A break back below would signal the Nvidia rally was a temporary spike rather than sustainable momentum. For now, February ends with tech leadership validated and the market at record highs. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.